Now, commodity story as well. Down under the global commodity slide is causing some major damage on the Australian stock market. Heidi, of course, is on top of that. Heights.
Good morning, Haslinda. Well, it's not just the commodity stocks, it's the banks, it's the retailers, it's the property stocks. Out of the 200 stocks listed on the benchmark index, just 6 are in positive territory today. The rest are pretty much clocking up some big losses. The commodities slump, triggered by the World Bank's sobering assessment of the global economy, is certainly having a significant impact here. The world's biggest miner, BHP Billiton, down nearly 3.5%. Rio Tinto declining nearly 4.5%. Fortescue Metals down 6%. Fortescue, meantime, considering building a port with Aquila Resources. The benchmark index at the moment is down by 2.75%. Have a look at the gold producers. Gold prices plummeted to a 5-week low on the back of that World Bank forecast. And part of the tumble in the price of gold lately has been due to investors buying gold as a hedge against inflation and as economies recover. Now after the World Bank's forecast, that's looking like a recovery could be a while off yet. Even so, with all the chaos in the commodity markets today, Australia's holding firm on its commodity export forecasts. The Australian Bureau of Statistics is predicting commodity export earnings will be about $126 billion at the end of the fiscal year. That ends June 30. That's down on last year, but pretty much in line with the forecast that it made in March this year. If we have a look at the financial sector here in Australia, the banks are in the red as well. Westpac is Australia's biggest bank, down 3.5%. A 3.5% decline for Macquarie as well. Of course, if the commodity recovery indeed appears to be short-lived, that has implications for growth here in Australia and also impacts on the outlook for the banks. The commodity slide also hurting the Aussie dollar, and Patricia Louis will have more on that shortly.
Heidi Kuch, thank you so much for that.